Advanced option trading for beginners, stock investing for beginners. I'm gonna show you how I made over 900 in a few days from one advanced option trading strategy. The stock that I use is Intuit, INTU. I traded on November 24. I closed the position on November 28. November 25th and 26th are Saturday and Sunday. So it only took me 2 days and made about $148.97. And another stock option, December 15, 2023, strike price 540 put option. I traded on November 28, then closed the position on 29. Just 1 day, I made over $538. And another one, December 22nd, expiry date, 450 strike price put option. I traded on November 6 and closed the position on November 7. So I made $218.97. You might think, oh, it took a few days, $906 is not much. But think about it. It only took me 1 minute for each position. Open the position, close the position. Maximum maybe 5 minutes, 10 minutes. That's all it took me. So 10 minutes times 3 positions. So it only took me 30 minutes to make $906.91 while I was traveling around the world. Remember, I've been traveling around the world for 2 years. So this is just like my part-time job or part-time career, whatever that you want to call it. And I'm going to show you how I did it step by step at the end of the video. And Intuit reported earnings last week. And last week, so it jumped. Like I said before, Intuit was a good company. And so that's why they beat the earnings, they beat revenue. So that's why it jumped. In the middle of the videos, I'm going to show you how to know if it's a good companies or good business to buy, a good stock to buy. 80% of people make mistakes if they don't know this. If you know this step-by-step strategy that how I look at stocks, you will avoid 80% of the mistakes beginners make. Last week, Dollar Tree reported earnings. It also jumped as well. Like I said before, I prefer Intuit to Dollar Tree. If you look at the 5 years performance, year to date is 46.82%. Year to date 10% down. But look at 5 years performance, 51.28%. So 5 years performance, 183.67%. So it's almost 3 times your money. So Dollar Trees, you will have made 50% on your money. So it means if you invested $1,000 in Dollar Trees or in 2018, your money will have become 1,500. But if you invested into it, your money could have become close to 3,000. 1,000 could have become close to 3,000. That if you are invested into it. Look at Foot Locker. Foot Locker reported earnings 5 days. It also jumped. Remember, this could be a 10-round stock, but I'm not gonna be investing in Foot Locker because if you look at 5 years, it's down 44%. And year to date, it stayed down 19.81%. But for trading, yes, it could be a really good stock to trade with stock options or advanced options, or you can just buy the stock and buy low and sell high if you want. Personally, I have lots of good stocks that I really like. I'm not even bothered buying or thinking about trading Foot Locker stock. It's just too much risk. What if Foot Locker goes bankrupt the next day? Whatever that may be. I don't want to risk it. I don't want to be bothered with something extra that I already have. Remember, investing on stock options or advanced option trading, what's really important is focus. A lot of people want to do stock trading, forex trading, or cryptocurrency trading, or everything, but they don't have a focus. They don't have a specialties to focus on a niche. If you know how to focus on a niche, it's very, very easy to make money, just like this, with the stamp of the finger. So I prefer advanced option tradings because it's really hard to lose money. Even if I messed up, it's really hard to lose money, and it gives me much more time. If I'm trading stock option, then I will be basically focusing so much more on looking at the screen, and I don't want to do that. I'm traveling full-time. I retire young, retire rich, so I don't have to take extra stress for that. Last week, last Friday, S&P 500 jumped 0.59%. 5 days 0.87%, and it's one up and down, up and down. I'm going to tell you why it happened in a minute. Year to date is up 20.15%. So if you invested $1,000 at the beginning of the year, you will have made extra $200 on top of $1,000. So in total, $1,200. So it's much better than putting your money in the bank. You don't want to be putting your money in the bank. The banks use your money to lend out, and they make so much more margin on that. So they may be paying you 5%, and they may be charging companies for 30%. So 6 times more on your money. So, but if you know how to do your own stock investing or invest option trading, you could make much more than putting your money in the bank. And Nasdaq is year to date 37.72%. So you might be asking here, cash versus stocks, which is safer? If you have only 6 months or 1 year, you might need the money for emergency, for school, for hospitals. Put your money in the bank. It's much safer because you can easily access stock markets. Anything can happen. It can crash tomorrow. Nobody knows. But over the long run, if you look at 5 years timeline, stock market, Nasdaq could have double your money, 105% over the past 5 years. Of course, it crashed a little bit over the 5 years, but still you will have made more money even with the crash if you put money at the beginning of 5 years. Of course, if you have a long time horizon, stock market is much safer. If you are DCA, you invest regularly once a week or once a month or once a quarter. I would suggest every time you get a paycheck, put your money in S&P 500 or Nasdaq, whatever that you like. This is not a financial advice, but that's what I would do if I still have a job. That's what I have done, and what I would do, just put money in S&P 500 or Nasdaq regularly, and that's how I retire young and retire rich. Maximum, if you look at the S&P 500, also went up over the long run. Dow Jones, it was up 0.82% last Friday. 5 days, it was up 2.46%. So Dow Jones outperformed S&P 500 over the past 5 days because of the healthcare company. Healthcare company have been underperforming this year. So, but I think it might change next year. Next year could be the year for the healthcare companies, healthcare centers in S&P 500. Year to date is only up 9.38%. Over the 5 years, 48.61%. So it's less volatile compared to Nasdaq or S&P 500, Dow Jones, but the return is much lower. 74.5% S&P 500, 100% Nasdaq. Dow Jones is only 48.61%. So this may be good for some people who don't like volatility. So what happened last week? Last week, new home sales came in lower than expected. It did not move the market so much. And home price index jumped. Forecast was 3.9%. It came in line with the 3.9%, but it jumped compared to the previous 2.5%. Consumer confidence was good, 102, versus the forecast of 101. 99.1 is the previous one. So what does it mean? It means that consumers still have jobs and they have confidence to spend money. So if they spend more money, the better is for the economy. Federal Reserve Chairman spoke as well. GDP came in really good, 5.2% compared to 5% forecast. Last quarter it was 4.9%. So yeah, the Fed was having a good day. They raised the interest rate, but they did not crash the economy, and lots of people still had jobs. New home sales went down because lots of sellers didn't know what to sell their homes, lots of buyers did not want to buy their homes because the interest rate was so high. So they were in limbo. So home builders, new construction, they started giving a lot of incentives as well. Even so, the new home sales were not as high as expected. Another thing is initial jobless claims. It was 218,000, but it was forecasted 220,000. Remember, it's better than expected, but the stock market did not crash. Stock market now is in a FOMO situation. Lots of investors did not invest in 2023, so they are looking ahead for 2024. So they don't want to miss out again. So they started pouring money in, billions of dollars. Remember, lots of institutions, hedge funds managers, billionaires, they still have lots of cash on the sidelines. So every dip they saw, they started buying. So the stock market did not dip much at all. But November was a stellar month, but I would expect some dips in December. So once I see dips in December, I will start adding to my position to the great stocks that I already have. For example, Amazon or Alphabet, and Meta is still under value. Microsoft not so much. Alphabet, yes, and also Alphabet and Amazon, they are still under value as well. Percentage income 0.2%, nothing much from forecast. Core PCE index came in 0.2%, same as the forecasted, but it was lower than the previous quarter. That's what the Fed was focusing. So the Fed was focusing for core PCE. It came out really good. So that's why S&P 500, the past 5 years, it jumped on Thursday because it came out better. It came out as forecasted. That's good news. Pending home sales was down 1.1%, but it's still better than forecasted. Forecasted was minus 2%. So it's higher than forecasted. It's probably good for homes, real estate transaction. Once interest rates start going down a lot more, I could see a lot of buyers gonna jump into the market. So that's gonna pick up the demand. That could raise the price of the real estate once more. So if you are thinking about buying real estate, now may be the best time before lots of buyers start jumping in. Of course, if you want to wait for lower rate, you could wait, but you might be fighting with lots of buyers. You could be paid a lot more on the asking price of the homes. As a manufacturing, it came in lower than expected. So manufacturing was down. So basically, there was a shrinkage in the manufacturing. So anything above 50 is good expansion. Anything below 50 is contractions. So there was a contraction in the manufacturing. It was forecasted 49.6, but 49.4 was the actual number. S&P Global Manufacturing PMI. ISM manufacturing was also down. Construction spending was up. So lots of home builders spent money on construction. Federal Reserve Chair Jerome Powell spoke as well. The market did not move so much. They didn't care. There's lots of FOMO in the market. So let's look at next week. What could happen to the next week economy? December 4th to December 8th. So factory orders forecasted to be down minus 3.5%. Services, remember last week manufacturing PMI was reported. This week it's going to be services. It's expected for 50.8, so there was a bit of expansion in the services. So let's see how the number came out to be. Will come out this week. Job openings is forecasted to have 9.4 million. ADP employment 120,000, better than previous quarter. Forecasted to be better than previous quarter. Productivity, it jumped 4.8%. Remember, because of AI. Now it takes less human power to produce the same results. So remember, if you are working in the restaurant industry, I travel around the world, I've been to Taiwan, there are some robots that gonna take your orders, that gonna give you the food, that's gonna clean the table, and also you can just put the tray on the robot that robots gonna take into account. So lots of waiter waitress jobs will be lost, as well as if you're working in sushi industry, there will be robots that could make sushi, roll the sushi. So if you are working in those industries, service industry, you should start picking extra skills, high income producing skills like stock investing, option trading, advanced option trading, and real estate. So those are the stock investing. Stock market existed the past 100 years. I believe it's gonna exist for the next 100 years, because no matter how advanced technology, lots of startup companies, they need cash. Where do they go? They're gonna go to the stock markets. They need to raise capital. They need cash from investor. So if you're investor investing in stock markets or companies, you will always be in demand. Lots of companies, they need your cash. So stock investing is a skill that's going to last for a long time, for your lifetime, even for your younger generations. The same with advanced options trading as well, and it will be really hard to replace humans in those areas. And also consumer credits, wholesale inventories, consumer sentiments gonna come out next week as well. Employment report forecast to come out 190,000. Previous quarter it was 150,000. So let's see how the actual numbers gonna be. And also hourly wage. So maybe there's gonna be some pickup in the wage growth. So if it's wage growth, I think the stock market could crash because of that? No, I know this because there's lots of FOMO in the market. So any dip stock market is gonna have, lots of money gonna pick it up. The big money investor, big institutions gonna pick it up as well. So next week we have 4 companies reported earnings. And what are those companies? I'm gonna show you step by step how I look at companies. If you know these steps, you will avoid 80% of the mistakes that stock investor makes. Dave & Buster gonna report on Tuesday, December 5th. Dave & Buster, if you don't know the business, they are entertainment industry. They are restaurant together with the amusements. So you can play machines, slot machines, coin machines. You can dance, basketball, play coins. You can play race cars. So and also you can order hamburger at the same time with at the Dave & Buster. And let's look at stock investment. It was up 5.12% last Friday. The past 5 days it was at 11.59%. But year to date it was only at 21.62%. I used to trade these stocks. One pandemic hit, I traded uptrend. But would I buy this stock? No, because the trend is 18.59% down. So I don't like it. I like companies, business that return higher over the past 5 years. Maximum is still up, but it did not move much. It's just almost flat. It even went down. So how do I look at companies? The first step is, what do they do? It's a restaurant industry, high capital intensive. I don't like it. It's gone. Second thing, I look at how long it has been in the business. 1982. It has been a long time. Yeah, it's good. It passed my second criteria, but it did not pass my first criteria. So let's look at the second time. The third criteria. How long has it been in the public company? So it has been a public company for almost 10 years, maximum. So I really like companies that has been public companies for at least 5 years or over. So yeah, so it's not bad. It passed my third criteria. The fourth criteria is, how was the stock performance over the past 5 years? It was not good. So I don't like it, so I'm not gonna invest it. So the fifth criteria is looking at financial statements, balance sheet. I don't even look at the fifth criteria if it did not pass the first 4 criteria. So I'm not gonna invest in Dave & Buster's. And the next stock is Toll Brothers. It's reported on Wednesday, December 6th. It's America's luxury home builders. So they usually have homes over 500,000 and up, 1 million, 2 million homes. This is home business industry, construction industry. The first criteria is, do I like this business? No. Let's look at the second criteria. How long has it been in the business? Since 1967. Good. It passes my second criteria. It did not pass my first criteria. But let's look at the third criteria. How long has it been a public company? Maxima, it has been a public company since 1986. It passed my third criteria. So 2 criteria out of 1 criteria. Then let's look at the past 5 years, the 4th criteria. How the stock returns over the last 5 years. Oh, it almost tripled the money. Yeah, so I can think about these stocks. But personally, I don't like this business. I have already allocated my cash in all the other businesses that I really like. So I'm not going to look at it. I'm not going to look at the financial statements or balance sheet. But yeah, if you want to think about investing in Toll Brothers, you can think about it, and you can look at their financial statements and balance sheet. And are they good companies? Is their balance sheet strong? And is your cash flow good? So if it passes all these criteria, you can think about investing in this company. But never put all your money in one company. Diversify at least 8 or 10 companies. Invest all your money across. Next stock, AI. It jumped 6.08% last Friday. The past 5 years, 7.18%. And year to date, almost triple the monies. And it has been in the business for over 10 years. Yeah, AI, I like the business. I like AI technology business. The second criteria, it has been in the business over 10 years. Yes, I like it. How about the public companies? How long has it been in public companies? Let's look at it. Maxima. It has been public companies less than 5 years. So I'm not going to invest in this stock. Plus, the 4th criteria. The past 5 years, the stock performance sucks. It was down 74.17%. So don't like investing. So I'm not even looking at financial statement or balance sheet or cash flow statements. But for stock trading, yes, you can do stock trading. AI hype, you can ride on the hype. You can use options. You can use advanced option. I can use advanced option as well. I'm not suggesting you to use it. This is not a financial advice. Could I use advanced option or option trading just for trading? Yes, this could be one of my watch lists for trading. The same way Toll Brothers, Dave and Buster, look for stock trading or option trading. I only look at price action. That's all I care. I don't really care about the company, what they do, how long it has been in the business, or anything at all. So because it's really quick. It can be day trading. I will get it in the morning, get out in the afternoon, or maybe get out in the next 10 minutes or 15 minutes. The same with option. I can get it today. I can get out tomorrow. Of course, this could be a company that could have the good business. It must not be a company that could go bankrupt anytime. If it can go bankrupt anytime, I'm not gonna even look at it at all. Either for day trading, either for swing trading, either for option trading or advanced option. Especially option trading or advanced option, I'm not gonna look at it if that company can go bankrupt anytime. Like WeWork could go bankrupt anytime. So I'm not gonna look at the WeWork company stock at all. WeWork stock. You see, it's down 5 years, 99.86%, 55 cents. In the last 1 month, 65.63%. If you thought that 1.6 is already down enough and you put the money in, you will have lost more than 50% of your money. So I wouldn't even touch it, even for short-term trading, not even for the day trading. I'm not going to even look at it. So it's too risky for me to take. There are lots of other opportunities to even look at this stock. Stock number 1, Restoration Hardware. Warren Buffett also invests in this company. They're going to report on Thursday, December 7th. What do? They are furniture, high-end furnitures like chandelier, couch, chairs, lamps, all the design in a house, luxury homes. They provide all those furnitures. So it's high-end companies, and the last 5 days it was up 6.22%. Year to date is up only 12.39%. It went down a little bit. The past 5 years is double the money. Yeah, not bad. Has it been in the business for more than 10 years? Yes, it has been in the business for more than 10 years. How long has it been in the public companies? Less than 5 years. So no, it did not pass my third criteria. The first criteria, do I like this business? Not necessarily. I'm neutral. And second criteria, it has been more than 10 years in the business. Yes, it passed my second criteria. The third criteria, has it been more than 5 years as a public company? No, it has not been. So it did not pass my third criteria. The fourth criteria, the last 5 years stock performance. Yes, it's up 20 up. It passed my fourth criteria. So for me, I would just do option trading or advanced option trading for this stock, or maybe day trading or swing trading. But I'm not going to invest in that stock to hold for long term, 1 year or up. Not my type of business. Next, I'm going to show you how to do step-by-step advanced option trading to profit. How I profited over $900 in a few days, maybe just in 30 minutes, combined all together. You can look for into a stock that if you want to trade advanced option, then I'm using Robinhood. You can use any stock brokers. I'm going to put the links down below. Robinhood is beginner friendly. It's easy for me to show, so that's the only reason that I'm showing Robinhood to you. It's not a suggestion to use Robinhood at all. Look up into it in your stock broker or option broker and trade into it option. Click on it. And December 15, if you want to trade December 15, go to December 15 stock option. That's how I traded. Selling put option. Click on put options. Selling put option. You can look up 540 if you want. I traded 540. If you click on 540, you will still get $120. $120 if you sell this put option right now. Of course, most of the profit have been realized by me for the past 1 week or 2 weeks. Over the past few days, in total 30 minutes, I realized $900 just within 30 minutes in the whole actions. Selling put option, closing position, it only took me 30 minutes to do that. So maximum loss could be 53,880. So remember, if you are selling put option December 15 at 540 for this stock, it means that you are willing to buy this stock anytime on or before December 15 at $550. 100 shares means 54,000. You need to have 54,000 in cash. Be ready to buy at this stock, 100 shares of this stock anytime before on or before December 15. And of course, if the stock price did not hit 550 or below, the put option buyer will not sell his 100 shares to you. So you are safe. As long as until December 15, the stock price did not hit 550 or below, you don't need to buy those shares, because put option buyers not gonna sell his 100 shares if the stock price is above 540. It doesn't make sense for him to sell the shares to you. Even if he sold his share, you will still make profits. Let's say the stock price was 550 and he wants to sell his shares at 540, so be it. You can buy one of the shares at 540 and sell it immediately in the stock market for 550. Take the profits. No investor would do that. No sane investor would sell his 100 shares at below the current market price. So you don't need to worry about it. So just be prepared to have 554,000 cash for that. And of course, if that company goes bankrupt the next day, you could be losing 53,880, 54,000 minus 120. So that's how much you could be losing. How much could you be making? Maximum profits, you could be making $120. Of course, there's a high chance that you will be making $120. That's why I sold this put option, because I knew that it's a high chance that I will be making more money than losing money. So you can click on continue, then you can execute the order, then wait until expire date to get $120. As long as the market price is above the strike price, you are safe. Do you have any questions? Comment down below. If you want to learn more, you can go to my YouTube channel, Master Rich Stock Options Crypto. Go to the playlist, Advanced Option Trading, and how much income I made. You want to know, you can click on it. Bond investing, stock market predictions, a lot of others, finance, stock investing, option trading playlist. Share, subscribe. I will see you in the next video. Bye.